Welcome to Griffonomics.
And we are absolutely thrilled to have you joining us today.
Yeah, today is March 10th, 2026, and we are on a very specific mission for you today.
A highly granular mission.
Exactly. We are conducting an inflection analysis of a company called Evolv Technology. We have this massive stack of sources on the table right now.
It is quite the stack.
It really is. We've got their just released Q4 and full year 2025 financial results. We've got the complete transcript from today's earnings call and their latest 10K.
Right. And for those of you who might not spend your weekends reading SEC filings, a 10K is that massive, comprehensive annual report.
The one public companies are legally required to file.
Exactly. It details every risk, every dollar, every structural shift in their business. It is the ultimate under-the-hood look.
And the central theme we're exploring for you today is a story of, well, fundamental business transformation.
Yeah, we're looking at how Evolv fundamentally transformed from what was, frankly, a high cash burn, early-stage growth story into a highly profitable, hardware-enabled SaaS powerhouse.
Which is an incredible pivot. And that is exactly why you should care about this deep dive today.
Absolutely.
Whether you are analyzing the broader tech landscape or looking at the digitizing of physical security or, just wanting to understand how complex hardware businesses scale into profitability, this deep dive provides the blueprint.
It really does. So to understand this, we need to start with the core problem Evolv solves.
The security paradox?
Right, the security paradox. For decades, facilities have had to make this brutal, unavoidable choice. You either have high security or you have high throughput.
You could never have both at the same time.
Never. Think about legacy solutions. Walk through metal detectors. Think about the airport TSA line.
The worst.
They mandate single-file lines. You physically stop, empty your pockets, take out your smartphone, your keys, put them in a little bowl.
And that creates a massive bottleneck.
A huge bottleneck.
Yeah.
And ironically, that bottleneck creates a secondary security risk.
Right, by gathering a massive, dense crowd of people outside a venue waiting to get in.
Exactly. So Evolv looked at that entire paradigm and essentially inverted it.
Because instead of basic metal detection, they are using this combination of proprietary electromagnetic coil sensors fused with advanced AI software.
Which allows people to just walk through at a normal pace.
Yeah, but how does that actually work in practice? I mean, how does a machine know the difference between the iPhone in my pocket and, say, a concealed weapon if I'm just walking by?
It comes down to the density and the physical geometry of the objects passing through the magnetic field. When you walk through an Evolv Express system, you don't stop.
You just keep walking.
You walk at a normal pace in an unstructured flow, meaning you could walk right next to your friend. As you pass through, those electromagnetic coils create a multi-dimensional signature of the items on your person.
Okay.
And the AI software is trained on millions of data points to instantly analyze that signature. It knows what a smartphone looks like magnetically. It knows what keys look like.
So it just ignores them.
Right. It ignores those benign items and only triggers an alert when it recognizes the specific structural signature of a threat, like a firearm.
And when it does trigger, they use this red box technology. It snaps a photo of the person walking through and draws a red box on a security guard's tablet showing exactly where the item is.
So the guard isn't patting you down blindly. It's highly targeted.
But the technology itself, as cool as it is only half the story here. The business genius is how they are monetizing this.
Yes. They aren't just boxing up a metal detector, selling it to a stadium and walking away.
Not at all.
And this is the crucial distinction. This is a security as a service model. Hardware-enabled SaaS.
Right.
The best analogy is actually the video game industry. You buy a PlayStation, the company might sell you the console at a low margin. The physical gateway is just the delivery mechanism.
Because the real money is the recurring revenue.
Exactly. Paying a monthly subscription to play online, get updates. Evolv operates on a very similar wavelength. When a hospital signs up, they aren't just getting the hardware.
They're subscribing to the proprietary software that runs it.
Yes, the continuous AI model updates and the diagnostic support.
Okay, let's unpack this. Because understanding how they structure these deals is vital to understanding their massive financial inflection in 2025.
It's the core of the financials.
The sources show they are actively transitioning their customer base toward a very specific 50-50 mix, a mix of what they call pure subscriptions and purchase subscriptions.
Right.
Can you break down the difference between those two for us?
Gladly. In a pure subscription, the customer essentially leases everything. They do not own the hardware.
Okay.
They pay a single recurring annual fee that covers the hardware lease, the software and the service.
Got it. And the purchase subscription.
In a purchase subscription, the customer buys the physical hardware upfront as a capital expenditure, like buying that game console outright.
But there's a catch.
A big catch. Even if they buy the hardware, they are strictly required to maintain a multi-year software and service subscription to keep the machine operational.
Because an Evolv system without the software subscription is just an expensive piece of metal.
Exactly. That continuous, recurring software revenue is the absolute lifeblood of their economic model.
So they have this incredibly sticky, recurring revenue engine. But looking at the 2025 timeline, they made a massive systemic change to how they handle the hardware side.
The direct fulfillment pivot.
Right. Up until the end of 2025, they were using a distributor licensing model with their manufacturing partner, Columbia Tech.
Basically, Columbia Tech built the hardware and sold it directly to resellers.
And Evolv just sat back, collected a licensing fee on the hardware, and kept the software revenue. But at the end of the year, they completely sunsetted that legacy model.
They did?
Why tear down a system that seems so hands-off and easy?
Because hands-off doesn't maximize long-term enterprise value. Evolv will now directly fulfill the hardware portion of its purchase subscriptions.
Taking total control of that physical revenue stream.
Yes. Now, if you just look at the surface-level metrics, this move caused some turbulence. In Q4 2025, their gross margin percentage dropped to 50%.
Compared to 62% in the prior year.
Right.
And I have to imagine that sent a few shockwaves around Wall Street. When analysts see a 12% drop in gross margin, they tend to panic.
They assume you're losing pricing power.
Right. So why did Evolv's management sound so confident about the specific drop?
What's fascinating here is the absolute unit economics. They intentionally accepted this margin percentage drop.
Intentionally?
Yes. You have to look past the vanity metric of the percentage and look at the actual cash. Under the old model, Evolv made, say, a 60% margin on a small $10,000 licensing fee.
That's $6,000 in gross profit.
Exactly. Under the new direct fulfillment model, they might only make a 50% margin, but it is on a massive $50,000 direct hardware sale.
Which is $25,000 in gross profit dollars.
By taking control of the hardware sale, they capture significantly higher total revenue, vastly superior absolute gross profit dollars per unit, and a massive remaining performance obligation over the life of those 4-year contracts.
So they basically traded a really pretty percentage on a spreadsheet for a massive pile of actual physical cash.
Precisely.
Well, let's see how that actually played out in the bank account, because the FY 2025 financial realities are pretty staggering.
The revenue momentum is undeniable.
Yeah, FY 2025 revenue hit $145.9 million. That is up 40% year over year. Q4 revenue reached $38.5 million, up 32%.
So the top line growth is accelerating.
But you mentioned earlier they used to be a high cash burn story. Did this pivot translate to the bottom line?
It did, and this is the most critical metric. Evolv achieved its 5th consecutive quarter of positive adjusted EBITDA.
And just to clarify, adjusted EBITDA is essentially a measure of a company's pure operating cash profit, ignoring things like taxes and depreciation.
Right. It shows if the core business is actually making money.
Yeah.
And ending the full year, adjusted EBITDA hit $11.1 million.
Wow.
That is a staggering $32.1 million improvement from the prior year's loss.
You can really see that when you look at their balance sheet. They're building a cash fortress. They saw a sequential increase in cash, and in Q4 was $69.0 million.
And generating $18.7 million in operating cash flow for the year.
Which is the holy grail for a maturing SaaS model. They are funding their own growth now.
And if you want to look at future visibility, look at the backlog.
The RPO.
Yes, the remaining performance obligation. It is sitting at a massive $293.6 million.
That's revenue they've legally contracted but haven't recognized yet.
Exactly. Plus an ARR annual recurring revenue of $120.5 million. And ARR growth is actually expected to comfortably outpace total revenue growth in 2026 due to their new pricing model.
So we have a highly visible, profitable, recurring revenue machine. It sounds bulletproof, but I have to ask the elephant in the room question here.
Generative AI.
Right. In an era where pure SaaS companies are being disrupted overnight by generative AI, how does Evolv defend itself? Why can't a tech dissent just reverse engineer their software?
Because Evolv controls the end-to-end stack. They don't just write software. They design the physical hardware down to the exact geometry of the coils.
Ah, so it's a hardware data flywheel.
Exactly. Think about the massive data set they have. They're screening over 4 million people daily across 8,000 cloud-connected systems.
That's a lot of real-world data.
Over 4 billion scans historically. And the CEO made a great point. This real-world data is completely useless to competitors unless they have Evolv's exact hardware.
Because you can't simulate the physics of a specific magnetic field on a rainy day with steel-toed boots in a software lab.
You have to experience it physically. And they're leveraging this moat. Look at the halo effect.
Right, the new autonomous AI bag screening solution, Evolv Expedite.
The cross-selling magic here is incredible. Out of 16 brand new Expedite buyers in Q4, 11 of them bundled it with the flagship Express system.
That creates an incredible customer acquisition cost advantage. You sell a unified checkpoint all at once.
It deepens the stickiness.
And what's interesting is that this tech isn't just for stadiums anymore. It's entering everyday life.
Your strategic expansion into new verticals.
Driven by what you might call legislative alpha.
Yes, massive regulatory tailwinds are acting as growth catalysts. Specifically, California's mandate for advanced weapons screening in healthcare facilities by 2027.
That forces an entire industry to upgrade.
And proposed legislation in Georgia mandating school screenings. That already yielded a $3.8 million product revenue boost from a single Georgia education customer in 2025.
The push into healthcare is striking too. In Q4, they announced a partnership with the American Hospital Association.
AHA.
Right, which designated Evolv as a preferred provider for its nearly 5,000 member hospitals. That's healthcare dominance.
And to support that scale, they're undergoing manufacturing diversification.
Right, because relying on one manufacturer is risky.
Exactly. They onboarded PlexisCore as a secondary manufacturer alongside Columbia Tech, expected to reach full ramp in the second half of 2026.
Okay, we've covered the growth, the AI moats, the tailwinds. But to ensure you are getting the complete picture, we have to flip the page to the legal and governance forensics.
We must impartially report on the company's risks.
Right. We aren't taking sides here, just giving you a balanced, objective view of the corporate governance overhangs.
It is a central context. Historically, Evolv had material weaknesses in internal controls.
Right, accounting controls.
Which led to the restatement of their 2022, 2023, and early 2024 financials.
So what is the remediation status on all of that today?
Well, the DOJ closed its investigation in August 2025.
Okay.
But the SEC marketing probe remains ongoing. There was also an FTC settlement regarding school contract cancellations.
And they naturally faced class action lawsuits from the restatements.
They did, but they recently detailed a $15 million class action settlement in principle.
And how much of that actually drains their cash?
Very little. $14 million of it is expected to be covered by D&O directors and officers' insurance.
So the financial hit is mostly mitigated.
If we connect this to the bigger picture, these are short-term execution risks that the company has aggressively worked to put in the rearview mirror.
Which brings us to our final verdict. The overarching theme here is a highly profitable transition.
The heavy lifting is largely complete.
Right. The financial restatements, the business model shifts, they're done. The pivot to direct fulfillment has successfully de-risked long-term margin leverage,
setting up a compelling opportunity for compounding cash flows.
So before we wrap up, I know you had a final provocative thought you wanted to share with everyone.
I do. It's something to ponder that wasn't mentioned in the calls. If Evolv's proprietary hardware is gathering the exact arrival curves, throughput volumes, and foot traffic data of over 4 million people a day.
Across the world's most iconic venues, schools, and hospitals.
Right. What else could that localized physical world data predict or optimize in the future beyond just security?
Could they become the analytics engine for physical real estate?
Exactly. Imagine monetizing the flow of humanity itself.
That is an incredible thought to end on. Optimizing the physical world based on the data of how we move through it. Well, that is all the time we have for today's deep dive. Thank you so much for joining us. We hope this gave you the blueprint to understand Evolv's massive 2025 inflection.
Risk defined, portfolio protected.